Today we made history with the NASDAQ making new all-time highs. We have Nvidia closing at new all-time highs, and today something happened that stocks normally do not do. So what does that mean for tomorrow? Now, if we look right here, Nvidia's 1.4 trillion comeback is just about complete. The stock is headed for a record. Now, we just talked about Nvidia making a new all-time high, and look at Nvidia on the weekly chart, absolutely blasting up through the highs, closing at higher prices. Now we come over and we look at this on a monthly time frame real quick. Look at how high we are up there. Could this be a double top situation? Look at the MACD indicator. We are also making a lower high on the MACD indicator. Yes, it feels good. We're at all-time highs. Or could this really spell trouble up ahead? Now, before we come over and look at something that happened today in the stock market that normally doesn't take place, let's come over and look at how the indices fared across the board today. The Dow was down 106 points. The NASDAQ was up 61 points. S&P 500 down 0.02, with the Russell 2000 being down 2.5. However, when we look at advancing issues versus declining, we can see it was lopsided one way. We see we had declining issues of 64.1. Now, when we come over and look at the sectors across the board, we only had two sectors in the green: technology and communication services. Now, we pretty much could have guessed technology was probably one of the best performing sectors out there, especially when we seen the NASDAQ at new all-time highs. But look at the NASDAQ, for instance. As we look at the NASDAQ, we're also having that same type of divergence on the monthly chart that we also talked about with Nvidia. We come over and look at the fear and greed index. We are back into greedy territory with a reading of 59. Now, we come over and we start looking at on the NASDAQ real quick on the weekly chart. What do we see? Well, top number one, top number two, is this going to be a triple top? Now, normally I'm going to come out here and tell you guys the more times we hit on a particular level, the more likely that level is going to give way. Now, a little bit of a problem that I have with the market having a sustained rally from this point on is the fact that if you look right down here from the low all the way up to today's high, the NASDAQ has rallied 35% without any sort of retracement on the way back down. Now we come over here and we start looking at this on the daily chart real quick. We can also see as we pushed above new all-time highs, look at the MACD indicator. The MACD indicator is clearly not at a higher peak than what we saw right up in this area. Now, does that mean we cannot go higher moving forward? It does not. Then we come over and we start looking at the 4-hour chart. We see the MACD indicator did get a fresh cross out here today, but again, we've had a huge MACD divergence playing out. Now we come over and look at the 30-minute chart. This morning we gapped up, then we were able to come all the way down, fill in the gap, and then we basically closed in the middle of the range. We actually zoom this up a little bit. We can see we're right near this minus development area in the market. Now, think about a minus development area is nothing more than inefficiencies in the stock market. Now, we come over and look at the futures markets real quick. Look at the 4-hour chart. And just to put this in perspective, all the way from Sunday night when we opened down here, we've had a range of 981.5 points in the futures markets from Sunday night's low all the way into the high of today. And if you look, we've had very few down candles out here. Now, at some point, we will have a retracement, and that's something we talked about today on the live stream. Now, if you guys don't want to miss the next time I go live, make sure you subscribe. You have the bell notifications turned on for all. This week, we have more Take Profit Trader accounts to give away. Now, if we go to we measure from the low to the high, now, assuming this high holds, could we push higher? Yes. If we do, we just simply got to grab the Fibonacci retracement tool, push it up a little bit higher. But when we get a retracement, the first area we want to watch is going to be the 38% retracement. Right now, that's coming in at 22,174. Also, we talked about this yesterday as well. We have a huge minus development area within the profile, anywhere from 217 all the way down here to about 22,098. Now, that's going to be a very high probability target location once the market finally starts to pull back. And something I want to mention, the first time we come into a minus development area, the market will either reject right back out or will end up chopping around and forming some type of consolidation in that area. Now, today we had something that has not happened in quite some time. Now, I want to make you guys aware of two amazing prop firm deals out there. My Fund and Futures, pass one, get one, and new users, 50% off your first evaluation accounts. Then Tradeify, 35% off all accounts till the end of the month. Take advantage of these offers. Use the links in the description box down below. Use promo code Mike at checkout. Now, today we had something that has not happened in quite some time, and this happened in both the NASDAQ and the S&P 500. If we go back and rewind the tape to yesterday, look at yesterday's price action. We had the P point down here, 21,910.67. We never took out that price point. Then last night we opened up and we see where the new P point was, 22,307 and a quarter. Once again, we did not hit the P point. And I can't tell you the last time I remember we've had two back-to-back days where we did not hit the P point. The P point is the floor trader pivot. You can basically calculate it by adding up the high, the low of the day, and the closing price and dividing it by 3. If you go back and backtest it, you'll see it has a very high probability of being hit on a daily basis. So now the routine is going to follow once again. Tonight, when the futures market's open, wherever that P point's at, I most certainly want to focus on and see if I can find and take trades towards that new P point area. Now, as we look at this, value area high is going to come in at 22,488 and a half. Point of control will be about 22,445, and value area low will come in about 22,407. If we can come down below value area low, I then want to turn my attention towards some lower prices. I want to turn my attention back towards some of the areas on yesterday's profile. Right down here, right below yesterday's value area low, somewhere in the ballpark of about 22,257. But just note, if we come below value area low and we start coming back up, I then want to target the point of control. I then want to target value area high. I then want to retarget the highs from today, also AKA new all-time highs. As we're at all-time highs, we'll see the market tends to make new all-time highs. More buying begets more buying in the market. Now, something that could be a very positive catalyst out here for stocks is the banking proposal that the Fed is trying to enact, and that is going to be lowering the requirements for banks. And the theory behind this is banks will then be able to go ahead and buy more bonds. If bank can buy more bonds, then guess what? That's going to make the yields go down. Today, we saw the 10-year yield actually sliding a bit lower. Now, we've had this ABC target up here about 4.86. However, we still have not been able to make it up there and take out that price point. We look right below the swing point here. If we end up going below a price point of 4.12, then that would invalidate this pattern and we would no longer be looking for that ABC pattern on the way up. We come over and look at the dollar index today. Dollar index breaking back below that weekly level. Again, we're starting to see more weakness out here in the market. Now, speaking of weakness out here, we come over and take a look at FedEx. FedEx beats earnings estimates forecast by 1 billion cost savings in the next fiscal year. So at face value, we would think that is good, right? Well, why oh why is FedEx down 3.27%? And that's going to be the simple fact why FedEx stock is diving after it broke this decade-long trend. And what it went on to say is FedEx basically said they're not willing to give a full year of guidance. They're only going to go ahead and give guidance for 1 quarter. In the market said, uh-oh, could there be trouble up ahead? Now, if we look at the volatility index today, another dismal day out there. Now, I do want to remind you guys, yesterday the VIX was down more than 10%. Today, the VIX was down 4.23% with a closing price of 16.75. Now, the rule behind the VIX closing down 10% yesterday implies that today or tomorrow was technically likely going to be a down day in the market. And technically, we did have a down day in the market. Now, it may have not been such a huge down day like a lot of people would have hoped, but that stat still came to fruition. Now, could there be more downside in the markets tomorrow? There more certainly could be. Come over and look at the gold real quick. Gold out here on the daily chart, we see gold basically with an inside day. This implies that tomorrow likely going to be a breakout or breakdown from this pattern. And before we come over and take a look at the S&P real quick, what could be the catalyst that could actually move the markets lower tomorrow? Well, we can see at 8:30 a.m. we have the final GDP numbers coming out. Then we have the weekly unemployment claims. Now, this is going to be important because they are forecasting 244,000 new filings for unemployment benefits. The previous reading was 245. If we expand this out real quick, look, we have jumped from about the middle of May from about 227 all the way to the high 240s. Now, one thing the Fed is a little bit concerned about is the unemployment. If unemployment starts to jump, well, maybe, just maybe, Jay Powell will have to flip early. We also get core durable good orders coming out tomorrow at 8:30. We get durable good orders. We get final GDP price index. Then barking's going to be barking at 8:45, 10 o'clock. We have another FOMC member speaking at 9 a.m. 10 o'clock, we have pending home sales coming out. Then let's not forget Friday, we're going to have the core PCE price index coming out, which is the Fed's preferred measure of inflation. We come over and look at the SPY real quick. The SPY today, almost, not quite up there, but almost getting ready to challenge to make a new all-time high. On the daily chart, though, if we look at the MACD indicator, we can clearly see the divergence playing out. Now, we've had this rising wedge. Normally, that's going to be a bearish pattern, but then we broke out from it and we just went sideways. Now we're trying to break on the way back up. Will this turn into a little double top pattern, or are we going to run to all-time highs? On the 4-hour chart, you can see the MACD indicator trying to get a little bit of a cross up, but again, huge divergence out here. Look how high the MACD indicator was along with this peak over here, as opposed to where we are now, and we're on the verge of making a new all-time high. Coming over and looking at the 30-minute chart, we see that big gap that we had out here earlier in this week. Then today, what do? Basically a D-shaped profile. And as I'm looking at this, there's an area I want to watch, and that's going to be right up in this minus development area, 607.39. Do we come up and towards this area and then potentially reject and go back lower? MACD indicator on the 30-minute chart is bearish at this moment, and we'll see if we get more follow through for tomorrow, maybe coming all the way down towards gap support or even all the way down, potentially filling the gap. Now, when we look at the S&P futures markets, similar to the NASDAQ, a rocket ship on the way up. This week, we've already had a 201 point range, and we can see now we're starting to have a little bit of a consolidation up in this area. Right now, we can see this upper area of the profile has had the most amount of volume traded around that area. Now, is this distribution getting ready for a small little pullback on the way back down? Maybe trying to challenge this minus development area. If we pull our Fibonacci retracement from the swing low all the way up here to the swing high, look at the 38% retracement. It comes in at 6,083.44. And that's also where we have a very poor structure within this volume profile. You can see it's basically non-existent. Also, where this minus development area is as well, also starts to get into this high volume area on the profile, and a minor retracement again will come right down towards the 38% retracement. So at some point we should get a retracement. Now, do we go higher before that retracement takes place? Only time will tell. Now, if you'd like to learn how to be able to spot trap traders by using the footprint chart, then make sure to watch this next video right here.